of 17 economists at 1.5%, still below the Bangko Central's 2 to 4% target band for 2025 and slower than the 3.7% inflation print for June 2024. So the 1.4% inflation today is among the lowest since November 2019. Now, a day before the June inflation figures released, the Bangko Central signaled the possibility of 2 more rate cuts this year. The governor, Eli Remolona, says inflation and growth are both weak and allows further easing. The Monetary Board will meet 3 more times this year in August, October, and December. And you're looking at a live shot of the media briefing now going on at the Philippine Statistics Authority in Quezon City, where National Statistician Claire Dennis Mapa has just announced Philippine headline inflation in June inches up to 1.4%. Mapa says this is mainly driven by faster increase in prices of housing, water, electricity, gas, and other fuels, which has over 63% share in the overall inflation in the Philippines. And they're now taking questions from the media. Let's listen in.
Electricity, gas, and other fuels dito sa National Capital Region ay yung presyo ng kuryente na na-mention ko kanina. Ang weight niya kasi, itong price of electricity, yung binabayad natin, 5.5% sa National Capital Region. Ang weight naman sa labas ng National Capital Region ay nasa 4.3%. Ang pangalawa na nag-contribute din, substantial, ay yung renta sa bahay. Dito kasi sa National Capital Region, ang renta sa bahay ay halos 18%.
That was National Statistician Claire Dennis Mapa saying that the price of power has contributed to the slight increase in inflation for June to 1.4%. Let's head now to Sampaloc Public Market in Manila, where our mobile journalist Merimon Reyes is standing by for a feel of consumers' actual purchasing power. Merimon, magandang umaga sa iyo dyan. Merimon, kamusta yung mga presyo ng mga bilihin sa mga discussions mo at interviews na nagawa mo sa mga vendors? Ano ang mga nasasabi nila?
Magandang umaga, Cathy. So far, ang pinaka-naobserbahan nila dito at naramdaman nila ay yung pagtaas nga ng presyo ng kanilang mga binibenta. Isang factor daw dito kasi ay yung sama ng panahon, lalong-lalo na at raw goods itong kanilang mga binibenta. Kasama na dito yung mga gulay, even yung mga karne na lalong-lalo na dito sa mga public markets ay hindi maaaring magtagal talaga. Isa pa sa ikinababahala kasi nila, ngayon ang nagiging puhunan, ang nagiging kita na lang nila dito ay roughly around 10 to 50 pesos. Depende na lang talaga ito sa mga karne. For example, kasi dito sa mga gulay, ang sibuyas, umaabot ng 150 pesos noon, pero ngayon pwede siyang pumatak ng 180 pesos per kilo. Ang bawang naman 160 pesos. Comparatively, nasa 10 to 20 pesos din yung tinaas nito sa mga lumipas daw na pagbebenta nila. Ang kamatis 60 pesos, ang kangkong 20 pesos ang isang tali, ang okra 10 piso ang tali, ang sitaw 20 pesos din ang tali. Ang talong naman nakwento rin sa atin dito, medyo hindi siya ganun ka malakas ang benta para sa kanila, pero ang nagiging puhunan kasi nila dito around 80 pesos. Ang nagiging benta lang nila is hanggang 100 pesos to 120 pesos. At bukod pa dito kasi, nagkaroon din ng abiso ang Department of Agriculture na pagdating naman sa mga bigas na nakita natin sa ngayon ay halos nagsibabaan naman na roughly around 36 pesos to 40 pesos, yung iba mga 50 na lang. Sobrang rare na natin makita ulit yung mga 60 pesos na bigas. Maglalabas daw sila ng abiso ng maximum suggested retail price ng 44 pesos this month. Pero para daw sa kanila, since maglalabas din ang DA ng MSRP para naman sa karne at sa pork by August and September, sana raw makausap muna sila mga stakeholders, lalong-lalo na dahil hindi rin nila masasabi kung magtataas din ng presyo ang kanilang mga supplier. Cathy?
Ayun nga, lumiliit yung kita, yung margin na tinatawag dahil sa pagtaas ng inflation. So ano ang sabi na ngayon ng mga mamimili dyan sa mga pag-interview mo sa kanila?
Cathy, may nakausap tayo na isang mamimili. Nagtatrabaho siya dito sa Maynila pero umuwi din every weekend sa San Jose del Monte, Bulacan. Dito, silang dalawa ng partner niya, mga 500 pesos per day ang nagiging budget nila sa pagkain. So far, para sa dalawang tao, okay daw ito. Pero kasi, kung hahati-hatiin nila, mura naman daw ang bigas ngayon pero ang karne mahal. So still, mukhang nagtipid sila sa bigas pero pagdating daw sa mga karne, napapamahal, napapagastos pa rin sila. Pag umuwi naman daw siya ng Bulacan, yung family of 7 niya, nagiging 2,000 pesos ang budget niya. Supposedly, ito inaabot na raw ito ng 1 linggo pero ngayon daw sa panahon ngayon, Saturday and Sunday lang nagiging budget ang 2,000 pesos. Pero wala naman daw siyang magagawa. So ang ginagawa niya na lang ngayon, binabudget niya kung ilang kilo na lang daw talagang ng karne ang kakailanganin niya, ilang kilo ng gulay ang gagamitin niya para raw walang mapapanis, walang masasayang, lahat makokonsumo. Cathy.
Oo nga, may gastos din sa pamasahe dahil tiga Bulacan pa. Maraming salamat. One News Mobile Journalist Merimon Reyes. Let's take a quick look at our markets. In the first hour of trading following the release of the June inflation report, we've come in at 1.4%, a tad faster than the previous month. The Philippine Stock Exchange Index is trading this Friday nearly flat. As you can see, they're barely budging, 6,469. PSEI has gained yesterday, Thursday, by 0.7%, and the broader All Shares Index ticked up by 0.1%. Trading was still strong as total value turnover surged to 10.23 billion pesos. Local counters were up, except for industrial and services sectors. Meanwhile, the Philippine peso today opens weaker, 56.40 to the dollar. The peso closed yesterday stronger at 56.25 against the greenback. For quick reaction and analysis, we're joined by Paul Joseph Garcia, Managing Partner of Grow Capital Partners, a boutique financial and investment advisory firm providing strategic advice and investment solutions. So good to see you again. PJ, welcome to the program.
Yes. Thanks, Cathy, for having me.
Yeah,
Morning.
so what do you make of that? 1.4% for June.
It's actually very good. I think that's, as you mentioned, slightly below market consensus. And I think, again, way below the 2 to 2.5% guidance of the BSP's inflation target for the year. So that means that policy is working. That means their policy stance over the past 18, 24 months have worked, and that there's more likely a path to a further rate cut or a more accommodative monetary policy stance from the BSP over the next 6 months.
But is policy working for the consumer? Because as you've heard from Merimon Reyes, people still feel the pinch of 1.4% as something very difficult for their purchasing powers. And we're coming all the way from 3.7% last June. They're still feeling the crunch. It should have made a difference.
Yes, surprisingly, there's been, I would say, a bit of some rough patch in the economy right now. And we saw the first quarter GDP numbers. Consumption was a tad lower than expected, given that in May or in the second quarter we had actually election spending. And I've been talking to some industry experts, for example, or in the F&B industry, and they all said that first quarter was really below their expectations for this year. And they're hoping that in the second quarter, and we just ended the second quarter like a couple of days ago, hopefully that will recover given the election-related spending in May. Again, that remains to be seen. But there seems to be a consensus that the first quarter, at least the first half of the year, was a bit more on the weak side compared to what economists and analysts were expecting.
And what do you think? Might that trend continue, given that we've had the escalations in geopolitics in the Middle East? And a rollback of fuel after a week's increase in prices. Just see how volatile that was.
Yeah. Definitely consumer confidence may be affected in the near term. However, with the recent quick resolution of the 12-day war between Israel and Iran has somewhat, initially oil prices went up, spiked sharply, but also came down back to where they were. So hopefully we'll see that more predictable geopolitical environment. Again, I wouldn't be betting on what do you call this? I'll be more cautious again. So I guess this will add more, I guess, to the uncertainty faced by consumers. And for investors, I think the the main thing that I'm looking at is that, or the positive silver lining that I'm looking at is that at least the Fed may change their current no rate cut stance to possibly a more accommodative or accommodating stance, and eventually lead to possibly at least maybe one to two Fed rate cuts for the rest of.
And just remains to be seen the timing of those cuts by the Fed, and also how that applies to how the Banco Central decides. He
Yes.
was pretty courageous to actually say at least two rate cuts, even before this inflation figure came out. Do you think he might go for a little bit more after what he's seen today?
Possibly, yeah, yes.
Going for three?
Yeah, because right now we're at 525. Remember, they just did a rate cut in their last meeting that was ahead of the Fed's, even though the Fed did not change their rates. So that for me was a bit bold, and it just showed that the BSP is more confident with regards to the inflationary expectations and the glide path of inflation for the rest of the year. So having said that, I think the two, I agree with BSP Governor Eli Remolona that 2 rate cuts is doable, or it's in the cards. But I'm not surprised if there will be another one, which will further, again, maybe surprise the market. And I think that will boost economic activity, because like what I said, in the first half, economic activity was a bit sluggish and behind the government's 6% GDP growth target for the year. And they've recently adjusted it, actually. So that means in the second half, we need a lot of catching up.
You're a fixed income guy, so we're going to focus on the bond
Sure.
yields now. There's been a curve flattening, and I've seen that your asset allocation strategy has stayed very diverse, but really skewed more towards, if we can just have a look at this, with the curve flattening, 40% of it in government bonds.
Yes.
How's that going to change now with what you just assessed after today's inflation results?
Possibly increase it to maybe a little more, to 50%,
How come?
possibly, yeah, and increase duration. And I think right now, if you look at 10-year bonds trading at around close to 6.4%, if you see a 50 basis points rate cut from the BSP and possibly almost the same 1 to 2 from the Fed, then maybe we can see a rally, or what you call a further decline in 10-year bond yields, and possibly more capital gains for investors. So remember, every 25 basis points rate cut would have roughly about 3 to 4% in terms of capital gains for bond investors, especially in the long end.
Interesting. So now that you're going to pump it up to 50, what happens to the 10? Where are you going to take it from? Is it going to be on the REITs, high dividend, Philippine equities, money market?
Yeah.
Lots to choose from.
Yeah, lots to choose from. But I think maybe the money market T-bills will reduce that further.
How come?
Yeah, because we think the curve is a bit too flat, meaning that we think once the BSP cut rates, then T-bills will be the first to come down, and therefore would rather be in long duration bonds, because there's more gains to be made there, because the bond prices will be affected, right? So we'd rather get the allocation from money market funds, and maybe a tad from Philippine REITs or high dividend paying stocks in the Philippines, because we think bonds have a better momentum for the rest of the year.
All right. Well, great. Thank you so much for that assessment. Really appreciate it. And
Thank you,
welcome
Cathy.
back
Thanks for having
to the
me.
show.
Thank you.
PJ Garcia of Grow Capital Partners. And we continue our discussion on June inflation release just minutes ago with Angie Pasis, President and CEO of AIA Investment Management Philippines. And in news overseas, U.S. President Trump says letters will soon be sent to countries to specify what tariff rates they will face to imports to the U.S. Keep it here on One News. Good to see you.
Good morning. Nice to see
Thank you.
you.
Thank you so much. PJ was just with me. I know. Welcome back to Money Talks. I'm Cathy Yang. With just 5 days left before the 90-day tariff reprieve ends, U.S. President Trump hints at sending letters to trading partners starting this Friday. The announcement marks a shift from an earlier pledge to strike 90 deals in 90 days. Trump chose to skip complex trade negotiations in favor of notifying 10 countries a day of the tariff rates that will be charged to them.
I'd rather just do a simple deal where you can maintain it and control it. You're going to pay a 20% or 25 or 30% tariff.
You put in a record.
And we're going to be sending some letters out starting probably tomorrow, maybe 10 a day, to various countries saying what they're going to pay to do business with the U.S.
Meanwhile, Trump will sign his marquee legislation known as the One Big Beautiful Bill this Friday, Independence Day holiday in the U.S. The bill cleared its final hurdle after the House narrowly passed it 218 to 214, quelling rebels who criticized the legislation for its price tag. The nonpartisan Congressional Budget Office estimates that the bill would add $3.4 trillion to America's $36.2 trillion debt. U.S. markets have hit another record high in Thursday's shortened session on the back of a stronger than expected jobs report. The Dow rose by over 0.75%, S&P 500 climbed by 0.8%, and the Nasdaq inched up by over 1%. U.S. equities closed yesterday at 1 p.m. ahead of Independence Day holiday this Friday. Driving market gains is NVIDIA, which briefly became the world's most valuable company in history. NVIDIA's shares hit by as high as $160 in morning trading, giving the company a market value of $3.92 trillion, surpassing Apple's $3.91 trillion posted on December 26, 2024. The AI chip maker ended yesterday's session higher at $159 per share. Benchmark 10-year Treasury yield settled to 4.339%, and gold prices declined by 0.5% to $3,331 per troy ounce. As for U.S. futures, they're pointing to slight declines when the markets open next week. The Dow falling by 0.2%. Both the S&P and the Nasdaq declined by 0.1% each. Trading in the U.S. resumes on July 7th. And Asian markets are a mixed bag in the first hour of trading this Friday. ASX 200 climbs by 0.1%. Kospi down about 0.7%. And the Nikkei 225 up 0.2%. Here at home, the Bangko Sentral ng Pilipinas sees room for 2 more rate cuts this year as inflation remains benign. Governor Eli Remolona says inflation and growth are both weak, giving space for further easing. But he also says rate cuts cannot really compensate for the slowdown in growth. Last month, the BSP cut its key interest rate by 25 basis points to 5.25%. And just minutes ago, the PSA data showed inflation accelerating to 1.4% in June, bringing the 6-month average to 1.8%, still below the BSP's 2 to 4% target this year. The Monetary Board's remaining policy meetings this year are scheduled in August, October, and December. We carry on with our inflation result assessment and analysis. This time we're joined by Angie Pasis, President and CEO of AIA Investment Management Philippines. Good to see you again, Angie. Welcome back to the program.
Thank you, Kathy. Nice to see you too.
All right, so you were tipping for inflation at 1.9 for June. What do you make of the actual
Yes.
result? It's far slower than your own forecast.
Yeah. Yeah, okay. So that was actually a welcome development. We were actually expecting that the dollar and the the 1.9 was the high end of the range. We were expecting putting in a conservative expectation mainly because of the surge in the dollar and the surge in oil prices last month, right, on account of the Middle East war. But if we were actually still happy in the sense that, the BSP actually still reduced its risk-adjusted inflation, and that number is still well below the 2 to 4%, 2 to 4% range wherein the BSP actually moves. So the trajectory of inflation actually gives the BSP elbow room to respond to any downturn in growth as a result of all the things that are happening in the global economy.
From your perspective, Angie, how are consumers and business reacting to the current inflation and interest rate environment, if you will? Because as PJ was telling us earlier, it's been difficult for consumers. Despite slower inflation, businesses aren't really spending for the first 6 months.
Okay, the investors are actually reacting to the fact that they do expect a recovery in inflation spending. It's really a quirk of our inflation basket, right? And it's affected by seasonal factors. Around this time, monsoon seasons, you really do see a traditional surge in the prices of agricultural commodities. But if you actually look at the other components of your basket, rice is actually down, and it looks like there's more room for it to go down. So rice in the inflation basket constitutes around 8%, but for the poorest of the poor in the Philippines, that's 30%. So especially if the government continues its targeted 20 peso rice, that actually frees up spending power for other goods and services. And if you look
Does
at
the
the
50 peso wage hike help, though, in
oh
giving them
yes,
purchasing power? But what
yes,
would that mean for inflation, though?
but we are expecting a bit of an uptick, but as long as your inflation expectation is below the 2 to 4% BSP range, and the BSP is actually forecasting for it to stay below 2%, that should be actually okay. And one other thing that you need to consider is that we have been a beneficiary of the trade scare that happened on Liberation Day, because what has happened is China has shifted. It's the biggest manufacturer of goods in the world. It has shifted to other countries, and we are actually seeing lower prices of goods because of the shift in the maybe I should call it dumping of Chinese goods.
Yeah, I'd like to see the other end of that, being a net beneficiary, because the Trump pause is still going to come on July 9th. But how
Yes.
do you position yourself amid what is, in a big way, still uncertain? How do you position yourself in consumer-linked companies? Will they be positioned to benefit? Are you going to be more nuanced in how you invest in them? Because we are domestically driven.
Yes. So we're overall bullish on consumption spending, but of course the different companies will be at different stages, right? Valuation will come into play. We're actually very positive on mall spending. Yeah. So you see more purchasing power getting into goods and services. So you kind of expect more traffic in the malls. So we like the retail space, and that when you actually look at the valuation overall, whether it's fixed income or whether it's equities, valuations are actually attractive. So what we have shared with our policyholders is that this roller coaster ride is going to stay, right? Because we're basically reacting to global news, right? That's sentiment. But if you look at the trajectory of the Philippines, it is actually stable. Real interest rates are high with inflation expectations going down, and valuations are low. So we encourage them, when you see panic, when you see the screen red, that's actually an opportunity to pick up.
Okay, we're going to keep tabs of that, and I hope nobody is colorblind to actually be in a position to panic. We're well beyond that. Well, thank you so much, Angie Pasis. Really appreciate your insights of AIA Investment Management Philippines.
Thank you, Cathy.
Well, the travel and tourism sector worldwide is expected to hit new records, but that growth may not be uniform across all countries. Jade Agustin has this report.
International travelers are spending more than ever before, and tourism's share of GDP in the Philippines is expected to keep growing. An economic impact research released by the World Travel and Tourism Council, together with Oxford Economics, shows international travelers spending in 2025 is expected to hit $2.1 trillion. This surpasses the previous record of $1.9 trillion in 2019. However, growth among economies are not uniform.
So while this is a story of strong global growth, there are some key markets such as the US, China, and Germany, which are not yet back to pre-pandemic strength in terms of visitor spend.
This year, the sector is expected to bring in record-breaking $11 trillion to the global economy, which is 10.3% of global GDP. With trade uncertainties brought about by tariff wars and geopolitical conflict, this prediction may be affected. However, Simpson says this year's forecast should stay unchanged. Here in the Philippines, the GDP contribution of the travel and tourism sector is expected to hit 21%, still lower than the 22.5% recorded in 2019, but higher than last year's 19.9%. WTTC's forecast for international visitor spending in the Philippines this year is at 709.2 billion pesos, which is 2.1% higher than the pre-pandemic figures. For Filipino travelers, online travel platform Klook says they are more open to different types of culturally rich experiences.
What's more interesting is emerging destinations. It's growing as of year-to-date, triple-digit in terms of bookings, and that includes the likes of Thailand and Vietnam, which really indicates that Filipinos are looking beyond the normal destinations that they used to go to.
Just last year, the Philippines achieved an all-time high tourism revenue of 760 billion pesos despite failing to achieve the target of 7.7 million tourist arrivals. A total of 5.95 million international visitors arrived in the country, higher than the 5.45 million in 2023. The tourism department is still recalibrating its target tourist arrivals for 2025. Jade Agustin, We Are One News.
And speaking of travel, the Mactan Cebu International Airport, or MCIA, is flying high once again after landing 7th in the list of the world's most improved airports in the 2025 Skytrax World Airport Awards. The global ranking recognizes MCIA's major upgrades in facilities, passenger experience, and service quality. Skytrax, often called the Oscars of aviation, bases its awards on reviews from travelers across over 500 airports worldwide. Aboit is Infracapital Cebu Airport Corporation CEO Athanasius Taitonis says the recognition reflects their push to make MCIA not just a gateway, but a world-class destination. The recognition also highlights Cebu's growing role in tourism, business, and global connectivity. And before we go, how about we end the week with a sweet treat? The World Chocolate Fair is ongoing in Pasay City, and with the theme of aliens versus dinosaurs in its 6th year, 10 vendors are participating in the fair. Now that's really colorful. Oro also collaborates with Chef Noel Catis, the Filipino chef behind the original viral Dubai chocolate recipe for bars available at the fair. There's also a special meet and greet with Chef Noel tomorrow and a drag performance on Sunday, July 6th. Did I hear free chocolates? That's a great way to end the week and also spend a very wet and rainy weekend. That is it for Money Talks. I'm Cathy Yang. Catch us again Monday, 9:30 a.m. here on One News. Have a great weekend ahead.